Hello, ladies and gentlemen. Thank you for standing by for iClick Interactive Asia Group Limited's second quarter 2020 financial results conference call. At this time, all participants are in listen-only mode. After management's prepared remarks, there will be a question and answer session. Today's conference call is being recorded. I will now turn the call over to your host, Ms. Lisa Lee, Senior Manager of Investor Relations. Lisa, please go ahead.
Hello, everyone, and welcome to iClick's second quarter 2020 financial results conference call. The company's results were issued earlier today and are posted online. You can download the earnings press release and sign up for our distribution list by visiting the IR section of our website at ir.i-click.com. Jian Tang, TJ, Chief Executive Officer and co-founder of iClick, will begin the call and provide a high-level review of the second quarter results and share insights on our execution strategy, followed by our Chief Financial Officer, Terrence Lee, who will give us more highlights on the financial results and guidance for the rest of 2020. Then we will turn the call back over to TJ for closing remarks and open the call for Q&A. Before we continue, please note that today's discussion will contain forward-looking statements made under the Safe Harbor provisions of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risks and uncertainties. As such, the company's results may be materially different from the views expressed today. Further information regarding these and other risks and uncertainties is included in the company's 20-F as filed with the U.S. Securities and Exchange Commission. The company does not assume any obligation to update any forward-looking statements except as required under applicable law. Please also know that iClick's earnings press release and this conference call includes discussions of unaudited GAAP financial information, as well as unaudited non-GAAP financial measures. iClick's press release contains a reconciliation of the unaudited non-GAAP measures to the most directly comparable unaudited GAAP measures. I will now turn the call over to our Chief Executive Officer and co-founder, Jian Tang. TJ, please go ahead.
Thank you, Lisa, and welcome to the call, everyone. Even in the uncertain environment, I'm delighted to share with you that iClick reported another record quarter of financial results, demonstrating the important role our data analytics services play in quickly understanding the rapidly changing online consumer behaviors here in China. We reported total revenue of 58 million in the second quarter, an increase of 18% from the second quarter of 2019. We are also happy that we reported record high adjusted EBITDA of 5.2 million, an increase of 322% from the second quarter of 2019. Our adjusted net income for the second quarter was 2.5 million versus a loss of 0.7 million in the second quarter of 2019. I want to bring to your attention that this is the third consecutive quarter iClick has reported positive adjusted net income. The historical all-time high adjusted EBITDA and adjusted net income we reported here are confirmation that we have reached an inflection point and are achieving the economies of scale necessary to maintain consistent profitability. China's economy has started to rebound after a steep slump in the first quarter caused by the coronavirus. Yet, there are challenges that still lie ahead. Domestic demand is beginning to drive China's recovery forward, but external demand could be at risk given the coronavirus effect overseas. So far, our business has proven resilient as brands are looking to China more than ever to make up for business lost in other areas of the globe still affected by the pandemic. Many of our brand customers are seizing this as a significant opportunity in the post-pandemic world as China's digitalization is continuing to thrive in the stay-at-home economy. We, along with many of our brand customers, believe the pandemic will change these behaviors permanently, and the information our company provides is an essential part of planning for this new reality. With this, I would like to share with you an update on the progress of two of our most important goals set at the beginning of this year. Our first important goal for 2020 is to improve the profitability of our marketing solution business. As many of you who follow our company know, our marketing solutions business is the bread and butter of our success. In this area, we see continued healthy and steady growth as our clients shift their marketing budgets to performance-based solutions, especially now, faced with the uncertain environment brought by the pandemic. Since the outbreak has caused such a dramatic change in consumer online buying habits, brands are shifting the advertising spends to increase online penetration, and we are in a perfect position to monitor and track the rapid evolution. With this dynamic as a backdrop, coupled with our diversified portfolio of over 3,000 customers, we reported revenue of 53 million from marketing solutions for the second quarter of 2020, an increase of 14% from 46.6 million for the second quarter of 2019. This business continues to scale and contribute to our profitability, and we remain positive about the demand of our performance-driven marketing solutions in the second half of the year. Our second important goal for 2020 has been to continue to develop our enterprise solutions business. This is and will remain our key focus for many years to come. We began this business in 2019, and I'm proud of what we have achieved in the past 18 months. For the calendar year of 2019, we generated more than 10 million in revenue from a standing start. For the first half of 2020, revenues have already reached 9.5 million. As a reminder, the gross margin profile for this business is almost 3 times of our marketing solutions. We are confident that this type of success continues to propel our top line and bottom line results for the foreseeable future. The demand driver here is that large and sophisticated brands have realized the urgent need to analyze and respond to the swift consumer demand shift to online channels caused by the pandemic. They now require a holistic data and technology strategy that can integrate online and offline data and include social e-commerce to pinpoint where the demand is coming from and how to capitalize on it. As this is taking place, Tencent, with whom we partner with regularly, has continued to make efforts in enhancing its WeChat mini programs ecosystem, which will benefit the way we utilize the mini programs as an interface to help brands engage and interact with end consumers. over the long term, we have shown this collaboration enhances customer loyalty and generates more business opportunities. Our enterprise solutions have helped our brand clients to achieve 3 core objectives: managing the customer engagement process, targeting and personalization, and the overall management of customer data. As an example of how well we have done with our integrated enterprise and marketing solutions, I want to share a case study of our client, Cha Cha Food. For those of you who are not familiar with the company, Cha Cha is the largest producer of roasted seeds and nuts in China. We launched a major initiative for them in April of 2019. As a result, the cumulative GMV was more than 64 million RMB for the 12-month period, ending in May of 2020. Also, the number of mini program visitors totaled over 12 million for the same period, while the number of monthly paying users rose by an average of 30% per month. I'm truly delighted with the results we achieved with Cha Cha, and it's just one of the many successful cases we have developed with our top-tier clients in just our first year of operation in this area. Overall, I'm extremely confident that we are moving toward becoming one of the leading enterprise and marketing cloud platforms in China that help brands acquire traffic, maintain consumers, and optimize customers' lifetime values. In addition to the robust organic growth, we are also continually exploring various partnerships initiatives, collaborative product offerings, and M&A opportunities to enhance our long-term growth. Currently, we are looking for targets that will complement our SaaS product offerings, or with the data and the technology that can further enhance algorithm to drive the rapid development of our enterprise and marketing cloud platform. As part of our effort to continually improve our proprietary market intelligence platform, in July, we announced the release of iAudience 2.5 with 3 key enhancements, including broadened data sources, newly developed predefined market modules, and a recognized brand audience profile display that provides even deeper insights into a brand's positioning and the competitive landscape. We expect these upgrades to help drive future demand for our marketing solutions. I want to take this opportunity to briefly update everyone on some of the industry awards and accolades we recently received this quarter. Winner of the Big Data Award in the advertising category at Singapore Business Review, Top 10 Digital Marketing Solution Providers in APAC 2020 by CIO Advisor APAC. Asia Pacific Leader in Smart Marketing Solutions by MediaZoom Group. 3 accolades in the 8th Top Digital China 2020 Awards competition. It's always very gratifying to be recognized as an industry leader. These awards complement our fine execution and are a tribute to the hard work and the perseverance of our entire organization, even in these challenging times. This concludes my opening remarks. With that, I would now like to turn the call over to our CFO, Terence Li, to discuss the second quarter 2020 financials. Terence?
Thank you, DJ, and welcome everyone. I'm happy to report that our business model continues to be resilient since being impacted by the pandemic. We continue to experience growth in demand for our marketing and enterprise solutions categories. To reiterate what TJ said earlier, our data analytics services play a critical role in quickly understanding the rapidly changing online consumer behavior here in China, caused by the pandemic. In this quarter, we continue to report record financial results, including total revenues, adjusted EBITDA, and adjusted net income. I'm excited to share a few key highlights from the second quarter of 2020. Our revenue for the second quarter of 2020 grew to 58.1 million, an increase of 18% from 49.3 million for the same period of the prior year. These results are attributable to the increased contributions from existing marketing solutions and enterprise solutions and were partially offset by a 4% decrease in the FX exchange rate of renminbi to the US dollar for the second quarter of 2020 compared to the same period in 2019. The revenue from marketing solution grew to 53 million for the second quarter of 2020, an increase of 14% from 46.6 million for the second quarter of 2019, primarily as the result of growing market demand from marketers. The revenue of our core business has steadily increased over time and has given us the ability to improve our platform and branch out into other opportunities. The revenue from enterprise solutions was 5.1 million for the second quarter of 2020, an increase of 87% from 2.8 million we reported for the second quarter of 2019. The robust growth was driven primarily by the increasing and immediate needs for online and offline consumers' behavioral data integration. iClick continues to build on its success as revenue in this area continues to increase. The gross profit for the second quarter of 2020 was 16.6 million, representing a 22% increase compared with 13.6 million for the second quarter of 2019, mainly due to continued expansions of the company's marketing solutions and contribution from higher margin enterprise solutions. As of June 30, 2020, the company had cash and cash equivalents, fixed deposit, and restricted cash of 64.2 million, compared with 61.1 million as of December 31st, 2019. For the rest of my discussion, I will focus on our non-GAAP results. You can find reconciliations of these non-GAAP results in the press release we posted earlier today, and which can be accessed at our investor relations website. The adjusted EBITDA for the second quarter of 2020 was an income of 5.2 million, an increase of 322% year-on-year. The results were primarily due to the increase in gross profit. The adjusted net income for the second quarter of 2020 was 2.5 million, compared with an adjusted net loss of 0.7 million in the second quarter of 2019. This is our third consecutive quarter of positive adjusted net income. We reported gross billing of 132.8 million for the second quarter of 2020, which represented a 6% decrease compared with 140.9 million in the second quarter of 2019. Please note that the renminbi depreciated against the US dollar by 4% compared with the same period of the prior year. On a currency-neutral basis, the gross billing would have been 140.3 million for the second quarter of 2020, relatively unchanged compared with 1 year ago. This stable performance reflects our strategic focus in risk management and selecting good quality clients amid economic uncertainties. For further information, please see the detailed recap of other financial metrics in the press release we issued today. On January 15, 2020, we announced a share repurchase program in which we may purchase our own ADS with an aggregate value of up to 10 million over the 12-month period ending on December 29, 2020. As of June 30, 2020, we purchased an aggregate value of approximately $0.7 million. Before I issue our guidance, I would like to take this opportunity to elaborate on iClick's current strategic focus from my perspective. In the first half of 2020, we continue to report record high profitability, include adjusted EBITDA and adjusted net income. I attribute this outstanding financial performance to our relentless cost control efforts through better operating efficiencies after an extensive review of our business we completed in 2019. Currently, we focus on Tang's credit quality in an effort to safeguard ourselves from the lingering global economic uncertainty. With these safeguards in place, we feel we are in a solid position to drive profitability, keying in on the high margin business while managing a cash flow more efficiently than ever before in our history. In past earnings calls, we talked about our increasing economies of scale and how we would eventually hit an inflection point in our marketing solution business, achieving profitability. We have reached these levels, and looking ahead, we are confident in our ability to maintain healthy and stable growth rate from the marketing solutions area, especially now as we see the continuation of advertising budgets shifting to online and creating an even greater need for performance-based solutions as a macro trend in the industry. Finally, we want to make sure we have enough capital to fund our various strategic initiatives. So to that end, we recently completed a $22 million private placement. This process will be used for working capital to ensure our continued growth as well as comfortably funding our enterprise solutions business, which will be our main focus for many years to come. We are gratified to see the organic growth from enterprise solutions increasing as it is already contributing 9% of total revenues in the first half of the year, compared with 5% of the same period last year. Now, I would like to conclude my remarks with our outlook for the balance of 2020. Please note that our outlook for revenue is based on current market conditions and reflects our preliminary estimates of market and operating conditions, taking into account the coronavirus pandemic. These are subject to change. Third quarter 2020, revenue is estimated to be between 66 million and 70 million. Revenue from enterprise solution is estimated to be between 7.5 million and 9.5 million. Please note that this is the first time we provide a quarterly guidance on revenues from enterprise solutions. Gross profit is estimated to be between 18 million and 22 million. For full year 2020, revenue is estimated to be between 240 million and 216 million. Gross profit is estimated to be between 70 million and 75 million. Adjusted EBITDA is estimated to be between 9 million and 12 million. Look that this is an upward revision from our prior guidance of 7 to 10 million released in the first quarter earnings release. Our outlook remains cautiously optimistic with full year guidance remaining unchanged. We have increased our adjusted EBITDA guidance as we continue to see the effect from economies of scale for the marketing solutions business. Please note that there remains the possibility of resurgence in local COVID-19 cases, along with the impact of global economic uncertainty that may influence our financial performances. Before I turn the call back over to TJ, I want to congratulate our entire company for executing and delivering these operational and financial results so far this year. I truly appreciate the efforts and we're excited to move forward and create more values for our shareholders in the future. With that, I will now turn the call back over to TJ for closing remarks.
Thank you, Terence. Since the beginning of this year, the coronavirus pandemic has swept the world, disrupting our daily work and life routines. The outbreak has driven many commercial and social activities online, and for many, the internet has become a very crucial link to the things they need and want. This all began as a necessity for many, but now consumers enjoy the convenience and the personalization the online buying experience affords, and online reliance is becoming the new norm. Many of our savvy brand clients view this trend in line with the Chinese idea that every crisis presents an opportunity. Given these micro-trends, we remain positive about the momentum in both our business segments going forward. While we expect to see continued stable growth in our marketing solution segment, we are experiencing strong demand for enterprise solutions as brands seek to understand the end consumers through a full consumer life cycle, as we provide a comprehensive solution to better understand online, offline consumer habits. We believe our enterprise and the marketing cloud platform is proven to fit all these needs in this area, and we are in a solid position to continue to grow in this environment. In closing, we are confident in our full year guidance. As always, we remain committed to long-term value creation for our shareholders and all stakeholders, and protecting the health of our workforce as we see the recovery in China unfold. This concludes our prepared remarks. Thank you for joining us on today's call. We will now open the call to questions. Operator, please go ahead.
Thank you. We will now begin the question and answer session. To ask a question, you may press star then one on your touchtone phone. If you're using a speakerphone, we ask that you please pick up your handset before pressing the keys. To withdraw your question, please press star then two. We do ask you limit yourself to one question. If you have additional questions, you may re-enter the queue. Today's first question comes from Thomas Chong with Jefferies. Please go ahead.
Hi, good evening. Thanks management for taking my questions, and congratulations on a solid set of results. My question is about our enterprise solution business. Can you comment about the number of customers that we target by the end of this year, as well as the customer mix by industries? And on the other hand, can we also talk about our key differentiation of our solutions versus our peers, as well as our thoughts of penetrating to mid-tier customers together with the new business model on take rate over GMV? Thank you.
Thank you, Thomas. This is Terence. So let me first answer the first part about the clients numbers and the pipeline first. And in the first half of the year, last year, if you recorded, we basically have completed our target to have 50 key accounts. So going into 2020, the first half, we did also complete around 50 key accounts. So we see a pretty strong pipeline right now, and going into the third quarter, we probably would add another 30 to 40 key accounts. So I think that's right now our expectations. And I think I would turn to TJ to answer the rest about more on the questions that you have.
TJ, this is the operator. I believe your line may be on mute.
Hi, 你好，我是 TJ。像我们CFO Terence 所说，实际上2019年我们在 SaaS 这个领域已经积累了大约50个 KA 的客户， 那么2020年今年上半年呢，我们又差不多新增了50个客户。
So hi, this is TJ. So just like what our CFO said, in 2019 we have already accumulated 50 key accounts, and in the first half of 2020, for the SaaS clients, we have 50 newly active clients.
而且我们预期呢，在今年的下半年，我们还会增加差不多几十个客户吧。我们目前这个阶段，其实我们SaaS 的解决方案 Enterprise Solution，我们主要是聚焦在消费品这个领域。那么这个消费品呢，可能主要包括一些像奢侈品啊，还有一些美妆客户啊。还有像食品饮料这个行业啊，也包括一些酒水，还有一些日化快销啊这些行业。
So for the second half of this year, we expect that we are going to add another maybe a few thousand new clients. And for the SaaS enterprise solution, this year we are going to focus on the sectors related to consumption, and industries include like luxury goods, cosmetics, food and beverage, and also FMCG.
我们认为中国的 SaaS 尤其是在服务这个企业的这个营和销这个领域的这个 SaaS 解决方案，目前仍然是处于比较刚开始的这样的一个阶段吧。我们觉得这是一个蓝海市场因此我们在这个市场里面，我们其实看到有许多这个不一样可以尝试的一些商业模式。
So we think that the SaaS market in China is still at the infancy stage, especially in terms of the marketing and the selling area. So we think this market is a blue sea market, and we have seen a lot of different opportunities, especially in terms of the trials of the business models.
我们目前提供的 Enterprise Solution 呢，其实主要是服务这个企业想要管理它的这个顾客的完整的生命周期的这样的一个需求。那么这个服务的这个链条其实非常长，从给客户带来流量产生例子，然后到这个例子进一步的转化为他的真正的顾客并且这个管理好他的顾客的这个关系。进一步的这个提高他的顾客的这个忠诚度以及这个产生复购这些呢，其实都在我们为企业提供的这个产品的这个考虑当中我们也在一定的程度上为企业提供相关的一些服务，所以我们认为这个市场，我们触及的这个市场其实非常大的。
So especially services who want to manage the full cycle of the consumers, including managing the traffic of the consumers to converting these customers into our real consumers who buy our goods, to managing the relationships with these consumers, and also to improving their loyalty, and also to leading them to with purchase the goods. So all of this are included in our services. So we can see that the market that we are trying to serve is quite big.
因为我们触及的这个市场非常大，所以呢，我们目前虽然主要服务的是一些中大型客户，但是因为我们目前这个 SaaS 方案主要还是在100多个客户吧。那么我们觉得其实我们服务的客户在这个大的市场里面还是非常稀疏的。那我们感觉呢，我们这个阶段我们其实主要还是加快迭代尽快的去获取市场。那么并且尝试不一样的一些模式对于有一些客户因为不同的客户处在不同的阶段尤其是对于中大型客户所以对于有些客户呢，我们更多的给他提供的是一些 数据分析的一些产品和服务。那么对于另外一些客户呢，我们可能更多的提供一些这个，比如说小程序的交易平台并且可以帮助他做一定的运营。但是不管是什么样的模式，我们认为我们目前的这些这个数据其实还是相对比较稀疏的，在这个非常大的这个市场里面。
So right now our market is so the market we are trying to serve is very huge, as I said just now, and a lot of the clients that we are serving is the mid-tier enterprises and also the large tier enterprises. And for the enterprises that we are serving, which are the 100 enterprises, a lot of these big clients are quite still in the market. So right now we mainly focus on updating our system, and also we are trying to expand the market. At the same time, we are trying different new business models, and we just try to satisfy different needs of different customers. Like some of our clients need the data analysis, so we would try to serve them in terms of this. And other clients might need a service of mini program management, and also other clients might need advice in terms of the operation. So we try to provide different services to different clients, but overall we're seeing the data is still being quite rare and still in the market, and that is the area we are trying to improve.
对，所以我们其实是 ，sorry， 所以我们其实是想针对不同的这个业务模式，可能需要更多的客户验证，我们然后再会选择一些合适的这个数据，进一步向市场披露。
So what we are trying to do right now is that we are trying to provide different business models to different clients, and after we get enough data, we will try to look at what business models work, and we will try to expand those business models to the market. Okay?
Thank you. Our next question today comes from Jian with Benchmark. Please go ahead.
Thanks for taking my question. Hi, TJ. Hi, Terence. Wanted to follow up on your enterprise solution part. I think as TJ mentioned, is the addressable part of the market seems to be substantial. Just wonder, what's the potential customer base in terms of number of customers you are seeing, as the underlying market? Are we looking for more addition of the customers or more ARPU growth going forward? And also trying to get a bit more understanding of the economics, particularly for the customers you recruit last year. Are we seeing a healthy level of renewal and potential expansion of their ARPU this year? And lastly, want to get an understanding of the margin profile for the enterprise solution right now. What's the gross margin level you see?
Hello, Fang. This is Terence. So let me first adjust some of the numbers, and then TJ can also add on some other, comments. As you mentioned, I think right now we are still focusing on growing the client numbers more than the ARPU at this moment. And the renewal percentage, because it's just the first year have the renewal, right now is pretty high, more than 90% plus. Our clients still come with us. And going into the second half, as I said, in the first half, we basically complete the 50 key accounts already. So we are looking forward for another 50 actually in the first quarter. So that's why we also raise our guidance a bit. And that's the current situation. Margin profile-wise is still stood at pretty high, around 60% for this particular segment. Basically, as we mentioned in our remark, it was like almost 3 times higher than our marketing solutions gross profit margin. So I would stop here and see if TJ has anything to add on.
这一块我没有太多的补充。我想其实刚才那个问题我能够提供的一些主要信息我都已经提供了。
Thanks for your question, but I don't have any further opinions on that question. I think I have offered a lot of details about in terms of that just now.
Thank you. Our next question today comes from Darren Aftahi with Roth Capital. Please go ahead.
Yeah, thanks for taking my questions. Nice quarter. Could you talk about, just following up on the last question, the revenue base for your enterprise solutions? What is the growth in existing customers versus growth from new customers? And then second question, maybe for Terrence. So you guided on your EBITDAs now 9 to 12 million for the year. You've already done 7.5, so this sort of implies 1.5 to 4.5 in the back half of the year. I'm just curious if there's any incremental investments. I know your operating costs came down year over year. Maybe that was anomalistic because of COVID, but I'm just kind of curious if there's any large investments in the second half of the year that maybe we're not thinking about. Thank you.
Thank you, Darren. Let me answer the second part first. And as you are aware, actually we raised the guidance of the adjusted EBITDA number, and we already completed 7.5 million. So it actually implied that going into the second half, first we are pretty confident in our bottom line. Second is that we're still controlling very well our operating expenses. The third is that, as you mentioned, we actually be a little bit prudent in terms of the expensing because of the new business that we are developing on the enterprise side. So we probably will bring in further expenses to grow this business segment further. That may actually erode some of the bottom line numbers. But we are still pretty confident because the marketing solution will be able to support that growth, and with some self-generated cash to help us to build this business further. And that's on your second part. On the first part, I think we basically mentioned some of the growth and some of the numbers. And right now the growth is mainly coming from new clients and new number of clients adding to our pipe, rather than some existing clients. Of course, they're reviewing the numbers, but that contribution relatively is still like 10-15% only. And with our whole pipe coming from new accounts mostly, when we add on new clients, then we basically have more revenue coming from the enterprise solutions.
And our next question today comes from Brian Kingstonger with Alliance Global Partners. Please go ahead.
Hi guys, great to see the strengthening profitability. First, what percentage of your enterprise revenue comes from U.S. brands or companies? And should President Trump's executive order remain in place regarding Tencent, do you see this impacting demand for your enterprise solutions in any way?
Hi Brian, this is Terrence. I do think that would have less impact on our enterprise solutions, because right now our enterprise solution is still pretty much only working within China or in the Chinese territory. So I think the President Trump's order, there's some clarification in this 1 or 2 days, and maybe it may not extend to that extreme, and it may be stopping some of the business in WeChat and TikTok, which are basically the overseas versions of Weixin and Douyin. And we don't have much business actually on the overseas versions. Only 1 to 2% of our business are on that WeChat and TikTok platform. So no matter marketing or enterprise solutions, basically the impact would be minimal. But to be honest, I think we are not in the best position right now to comment until we have further clarifications of what that executive order really means for the business, for Chinese company or for multinational corporations. So I guess impact would be minimal at this moment, as we basically based on the information available.
Thank you. Our next question today comes from Colin Liu with China Renaissance. Please go ahead.
Hi, TJ, Terrence. Thanks for taking the question. I think this one is mainly regard your enterprise solution. Since the start of the global pandemic, we've been hearing global SaaS companies talking about structural changes of their clients, customers or enterprises are accelerating to migrate to cloud-based services. I just want to ask if you have seen any such trends, any sort of structural changes of your customer behavior among your enterprise install base. If there are any services or products that used to be undervalued by your customers but now being highly appreciated. Could you just share some examples and colors on this? That would be very helpful.
嗨，你好，我是 TJ。我理解，你想问的问题是关于说这个疫情对我们 Enterprise Solution 这个客户的一些影响，对吧？或者说对我们的这个需求有一些什么样的特点，对吧
？So hi, this is TJ. As for my understanding, I think your question is that you want to know about the impact of the pandemic to the need of our clients, right?
是的，我想请教一下，就是说，看到这个经营环境的变化，对于客户的这个需求，对产品的功能的需求，有什么一些新的变化没有 ？So I just want to ask, under total different operating environments, what are the changes to customers' behaviors, their key asks for your products, and what sort of product features they really value right now?
好的，我来回答一下你的问题。我感觉是这样的，就是实际上呢，在疫情之前呢，我们已经有大量的这个客户需求，其实主要是集中在这个一个是数据的一些分析，然后呢，就怎么样运用这个线下的数据去帮助他们线上去达成交易这些其实跟疫情之后其实是一些有共性的一些需求。那么疫情之后呢，我们其实发现很多客户的这些需求更加强烈了因为疫情促使他们认识到必须马上从一些线下的一些生意模式转到线上来而且他们不想浪费他们原来在线下积累的很多的这个数据，很多的这个 consumer 的数据尤其是原来有很多线下门店的这样的一些这个大的企业其实他们有非常丰富的这个线下的数据。那我们的这个 solution 呢，其实在这个方面我们可以帮助他们把线上线下尽快的打通，有一些是尽快利用他们线下的一些 data， 尤其是一些交易的这个 data， 然后来进一步指导他们在线上的一些运营活动。比如说所以的话，这个我们观察到这个客户在这个疫情之后这个非常想要的一些需求就是需要有一个线上的交易环节，那么往往会选择这个小程序的商城或者是一些小程序的一些服务的一个小程序。那么有这样的一些这个交易环节之后呢，他们也需要一些基于数据的一些后台的指导环节。所以在这些方面，其实我们带来客户这方面非常强烈的一个需求。那我们也就是响应这个客户的这个需求这些方面我们的产品其实相对都是比较成熟的，而且我们也都能够指导这个客户尽快的完成这个部署实施并且能够带领他们进入一个运营的一个状态。这个我想是我们看到的这个客户比较强的一个需求。
So thanks for your question. Let me just answer your question real quick. So before the pandemic, we have already seen a huge demand from our clients in terms of the data analysis and also how to use the offline data to serve the online activities. So after the pandemic, we have seen this demand is getting larger, and for our clients, actually more clients have the need to switch their offline offline activities to online activities. At the same time, they don't want to raise the offline data. They want to use more offline data that they have accumulated in the past to serve their online activities. And because a lot of our brands used to have a lot of offline data before. So for our enterprise solutions clients, we can just help them to better make the combination of the online data and the offline data, especially to switch the offline data to serve the online services. And for some of our clients, they're especially interested in the services provided by the mini program stores and also other mini program services. That's also something we can help them. So we have helped our clients create a better purchasing environment for their consumers. And so this is one thing. And another thing, we have also helped them. We have also provide better backstage services to them to satisfy their needs. So not only did we satisfy their needs in terms of the data, we are also very mature in operating in this area. So we can help them expand their market and better deploy their proposals and plans. Okay.
Thank you. Our next question today comes from Nelson Chung with Citi. Please go ahead.
Hi, management. Thank you for taking my question and congratulations on your solid results. I have a question on your margin. Can management explain more on the drivers behind your saving in operating expenses? Was it driven by the operating efficiencies of the company, or is it driven by the synergies between the two business? For the enterprise solutions, what would be the biggest cost component of the business, and what will be the trend going forward into the second half of the year? Thank you.
Hi, Nelson. This is Terence. Thank you for your questions. In terms of the margin profile, I think our marketing solutions margin profile is always at around 23-24%, as we already present to the market. And for the enterprise SaaS solution, is a relatively high margin business, but it's not yet really stabilizing. But at around the 60% margin profile is pretty much attainable right now. And you asked about the operating expenses. Our base of the operating expenses, if you look at our recent quarters, even back to 2019, we are sitting at relatively stable operating expenses per quarter, around probably 50 million, 60 million kind of numbers. And that's like our base case right now. And to grow our business further, I think that would be quite a stable numbers. In terms of the SaaS part or the enterprise solution part, the major cost element is still basically human resources, basically the headcounts and the overheads. And we don't need to pay the media expenses as like the media or the marketing solutions. And I think that's the biggest cost component of the enterprise solutions. And I hope this answers your questions.
And our next question today comes from Bo Pei with Oppenheimer. Please go ahead.
Hi, TJ, Terence, Lisa. Thanks for taking my question. Congrats on the solid results. So my first question is about marketing solutions. I noticed even though our gross billing was flattish on RMB basis, but our revenue actually increased pretty good. So I think that was due to our increased take rate in that area. So I would like to know what is trend going forward. I noticed we mentioned we focus on the high quality customers. When do you think we can start growing the gross billing? And then my second question is about enterprise solutions. I think I heard we are trying to invest more into this business and then maybe do some merger and acquisitions in this area. So just wondering what kind of investments are the acquisition target that we are considering. Can you give more colors around that? Thank you.
Hi, Bobby. This is Terence. I'll first answer part one, and then I will let TJ to address your part two. And first of all, our gross billing is still growing. If you look at our first quarter total number, is still only 20% plus year-on-year growth for the first half. So the gross billing is still growing, but on the second quarter, and we focus more on the credit. And right now we do have the scale for us to have the capability to basically screen through the best quality clients, particularly under this uncertainty environment. I think that's pretty important for the company to ensure the margin profile and some high quality clients. So that's why our takeaway is higher, because that we pick the best, clients, and that with high margin, and also because they are more preferring the performance-driven solutions right now under the COVID. And during all these, so-called specific actions models or the CPA or CPC models, basically we will be able to recognize more in terms of the revenue on a gross basis. And that's why you see a slight increase in the take rate, probably around, 5 to 10% increase comparing to, the same first half of last year. So that's like the current situation. And going to second half, we believe when the market is more normalizing and that some of the branding customer also coming back, we probably would see the gross billing and the growth trend coming back again. And particularly with our strong and strength in terms of the performance solutions. So I think I would now pass to TJ to answer your questions on some of the M&A initiatives.
你好，我是 TJ。关于你问的那个我们后面的这个 M&A 的一些策略的这个问题我们是这么看的，因为我们现在 Enterprise Solution 呢，主要是服务这个企业。帮助他们管理他们顾客的完整的生命周期所以的话我们的这个以后的发展的方向，不管是 organic 还是 M&A 可能主要都是围绕这样的一个思路帮助他们更好的这个管理这个他们顾客的生命周期，从这个从例子到转化到成交到后面的这个 CRM 到后面的这个进一步的这个互动这个提高忠诚度带来复购等等这样的相关的一些事情。所以的话我们现在在这些方向上，我们其实看到主要有几个方面我们会比较关注。第一个是以消费者行为数据分析和洞察为核心的这种大数据或者一些 AI 的一些技术因为我们看到呢，现在以消费者为中心并且我们认为这样的一些洞察可以创造出很多的商机，所以这个是我们会比较关注的一个方面。那第二个方面呢，就是比如说一些网红 KOL 直播相关的一些端到端的一些产品或者服务因为我们觉得这个网红生态现在其实也是非常重要的一个生态，它可以帮助企业触达消费者提供一种全新的一种互动的方式也可以说是除微信之外另一种的社交化的媒体。所以我们的这个企业数字化的运营的方案也是希望能够整合这样的一些这个 SaaS 化的一些产品这样可以给我们的客户带来更多的这个商机。第三个方面呢，其实我们看的比较重要的是能够提高这个顾客的体验管理的这样的一些相关的一些产品因为顾客的关系管理呢，其实 CRM 之前已经是提的比较多了，但是我们觉得在中国其实这个消费者的要求是比较高的，除了这个 CRM 之外，我们也希望帮助企业能够更好的提高他们的这个顾客的体验 所以的话，这个方面也会是我们在看的一些方向。另外就是以微信为中心的一些 Market 的一些产品服务，这可能也是我们比较关注的一个方向。好，大概就是这样子吧。
Hi, this is TJ. Thanks for your question. So, as I mentioned earlier, our focus of serving the enterprises, our clients of enterprise solutions right now is to help them better manage their full cycle management of their consumers. To help them acquire the consumers and also convert them and also lead them to guide them to purchase and improve their loyalty and also retain them and also increase their repurchasing rate. So based on that, for our strategy of M&A, we mainly focus on these 4 areas. The first, we will focus on the AI for consumer analysis, which centers around the consumers. We will put a lot of focus on this. And also for the second area is the creator and KOL platform end-to-end solution. Because as we all know, the KOL or live streaming has been getting more and more popularity globally. And we all now acknowledge that this is a huge business opportunity ahead. So we believe that being equipped with this technology to empower the creators and KOLs will help bring more traffic more efficiently and create more business opportunities for our customers. And the third area is the customer experience management, which is also called CEM. In China, our customers and clients actually have higher demands and requirements these days. So not only the CRM is very important, CEM is also very important. That's why we will try to focus on this area too. And the last area is the customer experience. The last area is the MarTech product and services based on WeChat. All right.
And our final question today comes from Kevin Lay with Bank of America Merrill Lynch. Please go ahead.
Thank you very much, management, for the presentation. It's extremely clear, and also congratulations on the fantastic result. I was wondering, first of all, it's very good to know that you've broken out the SaaS revenue guidance for third quarter. 7.5 to 9.5 million for third quarter is very strong on a quarter-on-quarter basis. Is up 50 to 90% quarter-on-quarter. And you also, Terrence, I think you mentioned earlier that you're looking for strategic growth opportunities. I was wondering, just mathematically, are those opportunities already included in that guidance? Second of all, in conjunction with that, iClick is trading on, in my opinion, very cheap multiple still on 2.8 times EV to revenue. So in looking for these opportunities, how value conscious are you? That's the first part. The second part is with the share repurchase program. Last year you purchased $4.4 million US dollars of stock. This year you've purchased I think 0.7 million. Is that going to be more second half heavy this year? Thank you very much, and congratulations again.
Thank you, Kelvin. And first of all, in your first questions, to be honest, we haven't yet budget some of the merger and acquisitions potential, and mostly right now the guidance is based on our organic or some small investments and in terms of the business. And your second question is about our repurchase program. And in the first half, we did open $7 million US dollars share purchase. So we have more bullets going into the second half if we still believe that we are undervalued, and we probably would trigger, but it would lead the board to discuss further. But right now, I think to be honest, I think we do seeing our operations, our efforts are being recognized more by the market, And hopefully going into the second half of the year, these efforts will be recognized further by the market.
And thank you, ladies and gentlemen. This concludes our question and answer session. I'd like to turn the conference back over to Lisa Lee for any closing remarks.
Thank you once again for joining us today. If you have any further questions, please feel free to contact iClick's Investor Relations Department through the contact information provided on our website. Thank you.
And thank you, ma'am. This concludes today's conference call. You may now disconnect your lines and have a wonderful day.